Hey, what is going on, guys? This is Justin with Proficient Trading here, and today I'm going to bring you a new video, and I'm also going to be covering about the economy, the stock market, and what's happening with certain individual things like crude oil, interest rates, certain companies, cryptocurrencies, and basically just everything that are major to the market. So first, let's talk about TLT. So what is TLT? TLT is basically the 20-year Treasury bond ETF. So basically, whenever the government is in debt, they have to issue their debt and sell it to the central bank known as bonds. So whenever the central bank buys more bonds, usually the TLT would go up. When they don't, the TLT, Treasury bond ETF would go down. And so if we take a look right here around March, it went up pretty high. So what happened is that the the whole coronavirus happened, and basically the government was increasing its debt, and therefore the central bank was buying more debt because a lot of like things that happen to as far as GDP, unemployment, and different things like that. And therefore, it went back down as soon as the Federal Reserve stepped in and increased its balance sheet and performed even more quantitative easing that has been happening since 2008. And also, for as far as like the technical analysis and price action, I see it dropping. And this yellow line I drew out here is basically the divergence line. So the divergence line is basically whenever the resistance, as you see, it drops down, pushes up, and it breaks the resistance, goes up, and it now acts as a support right now. But I'm looking forward to buy it when it hits 146, and my target is going to be 150. If it breaks under 146, then I'll probably target 145 just to make a quick little profit. I also want to talk about DXY. So DXY is basically the dollar currency index. So this basically tracks the worth of a US dollar. So right here, as far as technical analysis, this is the major support and now going to be the resistance now area. So as far as 2016, 2017, and then now 2021, this is now going to be the resistance zone, and then right here 88.50, that one's going to be the support zone. And it's been dropping continuously, and it recently went up as soon as the stock market fell. The reason why, usually it's kind of strange for especially this year, because whenever the stock market falls, usually the dollar would fall in correlation with it. But in this case, there was a cash demand, so therefore the value of the dollar actually increased a little bit. And therefore, because a lot of people were losing their jobs, a lot of people had to work from home, so therefore that's what happened to the dollar standard. And right now, 92 is going to be the resistance, and if it breaks above 92, it should be interesting, especially for the index markets like the Dow Jones Industrial Average, the S&P 500, and the Nasdaq. Those should be dropping too, especially if the dollar keeps increasing. But if the dollar corrects under 92 and falls under 88.50, we should see the stock market so expected to keep pushing up, especially since that's in the blow off top phase. I also want to talk about things that's happening like as far as inflation. So this is very important to understand because if you this affects your life, because whenever you go to the store, a dollar really doesn't really mean too much anymore as far as comparing it to like 1950. If you compare the value of a dollar in 1950, you could do a lot with a dollar, especially a lot of people have relatives that have lived in the 1950s, and they could say, oh yeah, with minimum wage, I was able to support a whole family and buy a whole house. But now you can't even do that. And this is the reason why is because the dollar has inflated so much and buying power has decreased. Because the more of something, the less value it is. It's just like a Supreme. If everyone in the world was wearing a Supreme shirt, it's not going to be valuable to wear a Supreme shirt. That's exactly what's happening with the dollar. And personal savings rate. So this is also important to look at. The reason why, because as soon as the crash happened, the savings rate skyrocketed. The reason why, because obviously a lot of people working from home, you know, unemployment rate. So therefore, it's not really a time to spend. But until the Congress rolled out the stimulus checks, that's when savings rate kind of took a fall as soon as things were a little bit reopening. So therefore, spending increased. Kind of same thing with household debt and to personal income falling. So therefore debt usually falls in correlation with it too, especially since they don't have enough money. Not a lot of people are working, so therefore they don't have enough money to pay off their debt. Same thing when it comes to the federal interest rate. Right now it's a little above like 0.5%. And this doesn't really matter too much because right now we're in modern monetary policy. So what this basically means is that before, whenever an economy was rising, the Federal Reserve had to increase its interest rate in order to balance the economy and make sure that we have a balance in loans, balance in spending, a balance in borrowing for everything. Or when an economy would fall, they would lower the interest rate. Right now the interest rates are pretty low, but the economy is not increasing. And the reason why is because of modern monetary policy. So modern monetary policy is basically what we have right now, and it's just recently started since last year. And it basically means that the Federal Reserve can just print out as much money as it wants, and it's not going to change anything that's going to happen to the economy. That's what's going on with the CARES Act. Like just in 2020 alone, the Federal Reserve just printed $9 trillion, and it's going to increase this year. Job reports. So basically, with job reports, it matters too because of NFP and unemployment rate. So you can just search up on CNBC about unemployment rate. So NFP was increasing 49,000. So NFP is non-farm payroll. So everybody that works in the United States legitimately, except farmers, are getting paid. How much they're increasing, and unemployment rate fell. How it fell to 6.3%. I also want to talk about gold. So gold. Here's the thing about gold. Gold bounced up from a major weak support zone that dates back all the way to 2012 and 2013, and also right here under 1792. Draw that out right here. And right here, my next target, if it falls under 1761, which I doubt it will, I'll probably target 1650 or 675. But as far as I'm seeing an increase in gold, especially with the current state of the dollar. And I recommend you guys go to moneymetals.com, which you're actually able to buy actual commodities like gold and silver and copper too, but copper doesn't really have the value and security as a safe haven investment. Like if you want to save money, the 1 gram gold bar is only like $82, which it will change, especially with the price of gold. And another thing about gold I also want to mention is that ever since in 1933 that the US removed the gold standard, basically what it means is that you're able to exchange cash for gold, but you're unable to do that because the US is out of supply. Well, not out of supply, but they don't have enough supply to actually have it as another exchange. And in 1971, Richard Nixon completely removed the gold standard, therefore just weakening the strength of the dollar. And 1944, the Bretton Woods Agreement, just stabilizing the currency between the different European nations, just made the gold standard just, you know, very demanding. But we have a lot of demand for gold, but just not enough supply. Silver. Alright. So silver seems to be dipping too. And same thing like with moneymetals.com. You can still buy silver by the coin, the bullion, the gram, or how much you ever want. But those two commodities, I'm still optimistic. I believe silver is going to pass 30 as its major resistance zone. And it's going to hit new highs of potentially 50 in the future. Give it about a year or two. Okay, oil. Oil is a very tricky one, especially since we have Biden in office and especially with his plans to cut off oil contracts with the oil companies and give the contracts more towards the EV sector like NIO, Tesla, and potentially Apple. I'll get into Apple too. So with oil, recently happened last year in March, oil went negative. So what happened is that Russia and Saudi Arabia are both under OPEC. It's the Organization of Petroleum Exporting Countries. So they make negotiations on the price and the control of the supply of oil. So what happened is Saudi Arabia said, "Hey, we can operate at $7 a barrel to break even," and Russia agreed to produce as much oil to meet those demands. So they did, and it was going consistent, and the price was decreasing. So what ended up happening is that as soon as the coronavirus happened, there wasn't a demand for oil. So Russia and Saudi Arabia said, "Oh shoot, like we messed up. Like, how the hell we just, you know, supplied so much oil and there's no demand." So that's what happened is it was called negative interest rates. So basically they pay you to take the barrel of oil, and that's what people were doing. Some manufacturing and expenditure companies were doing, and therefore it drove the price a little bit back up, and then the government stepped in. Another thing I want to talk about is S&P oil and gas. So XOP. This is whenever oil and gas falls, and recently it's been going up because the oil and gas sector's been going down. But whenever the oil crash happened, what did go up was the drip. It's the S&P oil gas, the inverse ETF, 2 times leverage. So whenever oil and gas falls, this would go up 2 times, and therefore I was in it as soon as last year when the crash happened. Also want to talk about the S&P 500. So this is the basically the top 500 companies in the United States. It's a major index, that and Dow Jones Industrial Average and the Nasdaq, the top major three indices. And this one, I do believe another crash is going to happen around March. Not only for the fundamentals, which I don't really, my channel isn't based on fundamentals, it's more on just a technical analysis, like the actual history of the charts. And we're heading more towards resistance zones, and the highest resistance is this top red line, the major support, which we have just major support since the whole stock market has just been in an overvalued greed phase. And that's where I want to mention the QQQ. This one's the Nasdaq. It's almost the same as the S&P 500, except the Nasdaq tracks the top 100 companies, and the TQQQ. Basically, this one tracks the Nasdaq 100, but only the tech sector, like Amazon, Apple, Tesla, Microsoft, the tech sector focus only, because they're the ones that are actually driving the markets to go up, especially when Zoom came out, and not Zoom, but like when they had their IPO last year, skyrocketed. Okay, for the VIX, this is a major one too. So, like what happened last year in 2020, the VIX skyrocketed. This is the volatility index. So, whenever the S&P 500 increases its volatility, meaning like the movements like up and down, usually it'll go at a smaller movement, but when it goes very crazy with big movements, especially with the volume, this increases rapidly. That's what happened, and then basically right now it's a steady decline. For the VIX, it's not really a technical analysis type of trade. This is more of a position type of trade, like where you get in at a certain spot and you just ride the wave up, and it's like a pump and dump, especially except it's just volatility. Another thing is kind of the same thing as VIX. If you want to make money on the VIX, you can also make money on the UVXY. So this is the double leverage of the VIX. So whenever VIX goes up, this one goes up the same thing twice. That's when. And let's see. For individual companies, I want to talk about first Tesla. Very popular. Tesla, as far as technical analysis, we found the support. This one bounced up, and then targeted was $880.50. That was the resistance. If we can break $880.50, we're gonna surpass 900 for sure. Has to be, especially with Tesla's. It's actually a really good company, very great valuation. They have no debt at all, and their goal is to take over 50% of the car market, and they surpass GM and Ford and Fiat Chrysler all combined. without any debt. Apple, another rumors going on about Apple, so that's something you should watch out for. Very popular company, and there's been rumors going on and of them making their own electric car with Kia having a partnership. And if that rolls out, that can be good, especially with Biden's plans cutting the contracts with oil and giving it more towards the EV sector. That could be very beneficial for Apple. Same thing with Amazon. Amazon, so recently what happened is Jeff Bezos stepped down as CEO, and so now things are going to look a little different, very different, especially the way Jeff Bezos was running Amazon, and now we have a new CEO. I think his name is Jassy Newman, I believe. He's part of the cloud computing software for Amazon, like basically the Amazon Web Services and everything. And then now he's going to be the CEO, and it's going to be interesting as far as earnings and you know the debt and everything, and what's going to go on, how they're going to spend their money. Now, this is my personal play, DraftKings, DKNG. So I believe DraftKings is going to go to $65 a share, which right now I have a call option expiring on February 12th saying that DraftKings is going to go at least $63, and right now it's 63.87, and I'm going to sell it on Monday after the Super Bowl. So this is a Super Bowl play because DraftKings is basically a sports betting app, and obviously with Super Bowl coming out, I knew that DraftKings actually has good valuation too, especially with ARK Investments, a major hedge fund group. They invested in DraftKings too. Now I've been getting a lot of people telling me, "Hey, why don't you review about GameStop? What do you think about GameStop?" Well, if you're a beginner trader, I do not recommend you trade GameStop. I strongly do not recommend you trade GameStop, especially with like the meme stocks like BlackBerry, Nokia, GameStop, and AMC. A lot of those are super volatile, and it's easy to get caught in the trap because everyone has this thing called FOMO, which is the fear of missing out. So everyone buys at the high because they don't want to miss on the growth, but they don't have clear entry points. They just have rather on price points, which isn't good, especially with major hedge fund shorting the stock and a high short flow. It can be very easy to get to lose money and cut your stop loss. Now, moving on to crypto, I do want to talk about Bitcoin first, and then I'll talk about Dogecoin. So for Bitcoin, the thing about Bitcoin is I do see it surpassing 42,000. The reason why, as far as technical analysis, see, Bitcoin isn't a fundamental analysis type of trade. So fundamental analysis is looking at the portfolio of Bitcoin, like, oh, what type of companies are gonna do business with Bitcoin? No, that's not how Bitcoin really makes its money. Bitcoin really makes its money not only by the mining rigs and how the millihashes are getting mined, to unlock the crypto, and it's mostly about how it's being traded. As you can see, it's already been dipping, and this is the resistance zone around 39,000, 40,000, and its finding support is very strong. I can see this easily surpassing 42,000, especially since this also moves in correlation with the stock market, how it increased. Same thing with Dogecoin. So Dogecoin, I see it surpassing 7 cents, and especially its major top was 7 cents too. And I do believe it's going to, if it could target 10 cents, that would be really great, especially since I have a little bit of money invested in Dogecoin too, because I see the high risk but the high reward. But whenever something's very high risk and it's kind of a blind trade that I'm doing myself too. But if you're gonna invest with it, be smart about risk management and understanding what you're investing with. Well, that's all I have for today in this video. I just want to thank you guys for tuning in. All right, I'm out.